My name is David Rodriguez, quantitative strategist for dailyfx.com, and I'm here to talk about one of my favorite trading tools, the Speculative Sentiment Index. But before we get started, I always start off with, I'm required to, but I also feel it's necessary to talk about risk disclaimer. If you've been to enough of these, you know the standard boilerplate language. But on a personal level, the last thing I want anyone to do is think that I'm, a market wizard, that I know everything that I'm talking about, and follow my words verbatim. So the last thing I want you to do is go straight to your trading station from here and put in trades because I said so. Because, like anyone else, I'm by no means infallible. And you definitely have to do your own homework and have your own ideas to trade. So if you ever traded in another market and you're coming to FX, you know that FX is very different than, let's say, the stock market, because in the stock market you have the New York Stock Exchange, you have the London, you have the London exchanges, and you have a lot of centralized places in which shares change hands. And in FX, on the other hand, you have something of a web of different banks, different liquidity, different aggregations, different feeds, let's say Reuters here, EBS there, and everyone's interconnected, but there's no one place that everyone trades. And this is a really big detriment, in my opinion, because, or not necessarily the fact that there's no centralized exchanges, that necessarily isn't a detriment, but the fact that we don't have that kind of information that we would get from the New York Stock Exchange, let's say, that's really good in helping us trade. So right now, I'm showing right now an S&P 500 chart with volume and a US dollar chart without volume for approximately the same time frame. The one on the left is literally and figuratively more colorful because you get a lot of more insight into what's going on in the market if you know how many people are buying, how many people are selling. In this specific instance, I won't hide the fact that I'm fairly bearish to S&P because it continues to rally on relatively light volume, and the biggest volume days tend to happen on the down days. That's a little bit beyond the scope of this presentation, but that's something that I would know from looking at an S&P chart that I wouldn't know from looking at Euro-US dollar chart because, again, there's no volume information for FX. Now we go to a couple different places to try to mitigate this. There's no one place that FX trades because it's an over-the-counter market by its very nature. But there are a couple of exchanges that trade FX. One of the most prominent is probably the Chicago Mercantile Exchange. And given that the Chicago Mercantile Exchange is under the jurisdiction of the Commodity Futures Trading Commission, we get information from the regulator about positioning, about volume, on these markets, on FX futures markets, which, while not a substantially large percentage of the global market, is large enough such that we can get a good sense for what major players are doing in the FX market. So the great thing about the COT report is that it breaks down information by type of trader. It gives very granular information on a weekly basis. So right here we see, I don't expect you to see everything on this chart, but for instance, right here we see that we have positions broken down by non-commercial and commercial positions, which is actually fairly important because non-commercial traders tend to be the big hedge funds, the commodity trading advisors that trade for profit, for speculation. Whereas the commercials are your Toyotas or your BMWs of the world that try to hedge currency exposure via the FX futures market. And as such, it's actually pretty significant that they separate the two because then you can see what different market actors are doing. Unfortunately, the COT information is great, but there's a key limitation. And that key limitation is that it's only released once a week. And when it's released, which is approximately Friday, about 3:30 Eastern Time, when it's released, we're only seeing Tuesday's data. So that significantly limits its usefulness as a market timing tool because it's only once a week and it's on a 3-4 day delay. We try to bridge this gap, and obviously the title of this presentation is SSI, the Speculative Sentiment Index, but we try to bridge this gap by offering our own COT report of sorts that is very different than the COT, but in my opinion, just as, if not more useful, because of the fact that you can access it on a twice daily basis through DailyFX Plus, and we'll get to how to use this information in your trading when we talk about the DailyFX Plus trading signals. But suffice it to say, it would be useful to have the COT data on a more high frequency. And sure enough, we provide the SSI data once a week on DailyFX with no delay, and twice a day with no delay on DailyFX Plus. So a couple of facts behind the SSI. Why is the SSI significant? Well, I was talking about the COT report and how it's very useful that they split the report into commercial traders on one side and non-commercial traders on the other side. That's really significant because commercial traders do not speculate, or as a general rule, do not speculate in the markets. Whereas non-commercials, their sole purpose is to try to say, I'm going to bet that the euro is going to rally. This is a pretty critical distinction. And it's similarly significant to understand what the SSI is all about. So obviously you're at the FXCM Expo. FXCM is one of the largest foreign currency brokers in the world, and we have access to a very deep pool of client data that we aggregate and post as the SSI and share with our own clients. This is substantial, and I put up the sales material on FXCM because this is a couple of other firms have tried to imitate us, but when you look at the fact, or as far as the SSI is concerned, but when you look at the fact that 150,000 traders go through us, you can see that we probably have one of the most representative samples in the FX market. Now, I keep on talking about why it's significant to differentiate between different groups of traders. Classic examples, non-commercial and commercial, but it's similarly significant to classify the retail side of the market very differently. Now, we use the SSI data in a contrarian nature. That is to say, if too many people are buying, we're going to look to go short. If too many people are selling, we're going to look to go long. Why? Because the trading crowd tends to fade momentum. That is to say, it's human nature to try to buy what's cheap and sell what's dear. Unfortunately, when you have too much people doing that and sentiment overwhelmingly in one direction, that's usually a sign that price can continue in the other direction. The classic example of this, and you definitely saw this exact example in my last presentation, is the Euro-US dollar on its run from 124 just about to 160. So again, we use the SSI as a contrarian indicator, and here you see the SSI ratio in red if it's net short, in green if it's net long. So we saw that traders literally went net short for the first time in a little while, right around when the euro was trading at a lowly 126. That was in October 25, 2006. And subsequently, we saw that the euro continued to rally, traders remained heavily net short, and had you taken that contrarian signal on that first trading day, you could have seen the euro rally up to 160. Now, that's all well and good, and again, this is a cherry-picked example. It doesn't always work this well. But I think more significantly is the fact that, all right, well, if you're telling me something's going to rally while it's in an uptrend, that's not very helpful. But the real thing that got me excited about the SSI is something like this. So we see that the euro's rallying, and the thing says to buy, big deal. You could have had a moving average that said the same thing. The key thing is that, all right, we hit 160, and then traders hit net long. It falls a little bit, and then we kind of see a little bit of a choppy price action for a little while right here when traders go net long and net short depending on the day. And I'll tell you right now that the SSI does not work well in these environments because it works best as a trending indicator. You use it as a contrarian indicator when markets are trending. But back to what I was saying, why this seems so much more significant than the moving average, let's say, is right here. So the euro tests 160 again, but then it pulls back. And what do Forex trading crowds do? Well, despite the fact that they're short the euro for such a long time, they all of a sudden said, all right, well, you know, I give up. I'm going to stop trying to sell the euro because it hasn't been working. Well, this is exactly the point at which I said, or the indicator said, better put, sentiment has clearly shifted. People are going aggressively net long. Here, people are going net long, but the ratio hits 1.5. It's fairly significant. Here, people are going really net long. And that's telling me that after so long, after being net short for so long, people are buying so aggressively, I'm probably going to look to go in the other direction. Sure enough, had you taken that contrarian signal right there when the SSI ratio basically went above 2 long positions for every short position, then you probably would have gone short here and covered it when the SSI ratio, let's say flipped to net short right here, which was, let's say, about 1,500 pips. It flipped to sustainably net short a little while longer. So I've been talking about the SSI ratio a lot. To explain it, the SSI ratio is pretty simple. The number is positive if there are more traders long than short. And the important thing to note here is that we don't do actual positions. We do number of traders. We found that through our research, the number of traders mattered more than the actual money in either direction. Why? Because a couple of big traders can skew the indicator. So when I talk about the SSI, when I say that 1.5 longs per short, I'm saying that there's 1.5 traders long for every one that is short. And this is pretty significant. So we see here that, for instance, and this is a very extreme signal that everyone's really net long, there are 4.28 traders long the dollar against the Swiss franc for everyone that's short. That's pretty substantial. And you can kind of get a sense of, or it's somewhat intuitive to see when markets are becoming extreme. Let's say 1.1 is not very extreme because that means that roughly the same number of traders are long that are short. If it's 2, on the other hand, you say that there's 2 traders long for everyone that's short, that's 66% of the market, then you start seeing that sentiment is leaning heavily in one direction. So you can get all this information here on DailyFX Plus, and this is honestly one of the best value addeds of DailyFX Plus. You get this information on a twice-a-day basis. You can get it for free, DailyFX Plus is free if you're an FXCM Live client, but you can get DailyFX SSI data once a week on dailyfx.com. Here you get twice-a-day updates on exactly what's going on, and I'll go over exactly what these charts are telling us. So the chart on the top left right here is the SSI ratio per currency pair. Now we'll see that we have the euro, the sterling yen, dollar against the Canadian dollar, Swiss franc, Australian dollar, and New Zealand dollar. But what I want to mention is something that's actually fairly significant. So you see this open interest pie chart right here. You notice that the Australian dollar and the New Zealand dollar comprise a very small portion of all FXCM orders. What does this mean to me? The SSI data, in my opinion, in my experience, for these pairs is slightly less accurate because so relatively few people trade it. When you're drawing a sample or you're doing statistics or whatever, you want as big a sample as possible so you have the greatest degree of confidence, or the smallest confidence interval if we want to talk about statistics. And it's the same thing here. It's definitely the same thing in trading. You see that the euro-US dollar is far and away the largest single component of open interest on FXCM's books, and subsequently I would lend further weight to the euro-US dollar SSI because there are so many people trading it. Now, the SSI ratio in itself is very significant, but I also like to point out that here we point out the daily change in long orders and daily change in shorts. And this tells me exactly, okay, well, maybe in this instance, everyone's really heavily net long the US dollar against the Swiss franc, or actually a better example in this case, the Canadian dollar against the US dollar, or the US dollar against the Canadian dollar. So the SSI ratio tells me that there are 1.5 traders long for everyone that's short. That's actually fairly extreme. That's getting there. You could, that's a fairly good signal that it'll continue to fall, let's say. But I'll draw your attention to the fact that overnight, the number of short positions has skyrocketed about 70, or the number of traders long has jumped substantially by 72%. And that tells you, despite the fact that there are more traders long than those are short, people have been selling pretty aggressively, and now might be a time to actually ignore the actual value of the SSI ratio and actually look in the change in direction, let's say. So whenever anyone asks me, how do I trade with the SSI, I always say trading signals. Why? Because, well, you can definitely use SSI on a twice daily format. You can definitely get a good sense of what's going on, but these are automated trading systems, several of which use exclusively the SSI and are basically have a couple years under their belt with fairly good results. So these are, let's say, tried and true, past performance not indicative of future results, obviously, but these are systems that have had a couple years under their belt and have shown relatively good results over the past few years, trading solely off the SSI. So you go to the Daily FX Plus page, and right at the top of your screen, you'll see the alert section where we tell you, well, this system just sold, this system just bought. And then you'll see a breakdown further below that you'll see per currency pair what's going on. Right here we see that this system sold and this one, these two systems went short and this one went long. Well, what do we do in this situation? This is a complicated answer, but essentially I want to take you through each individual system to really give you a better sense of what might work in what situation. So right now, again, we see that range 2, which is a range trading strategy, as per the name, thinks that the euro has fallen a little too much, it went long. The momentum systems, which by name trade momentum, so they're more trend-based, or they are trend-based, have gone short. That is to say, all right, well, range 2 thinks that this thing is going to pull back, but these two think that it's actually going to continue going lower. And let's go over individual trading systems so you can get a better sense of which you might want to choose in specific market environments. So right off the bat, this presentation is obviously about the SSI. And whenever anyone asks me, how do I trade with the SSI, I point them in the direction of the trading signals, but more specifically, Momentum 1 and Momentum 2, which we'll see just shortly. So I was talking about how the absolute level, the absolute SSI ratio is significant. Well, Momentum 1 uses the absolute ratio to set a trading bias. So in this instance, you'll see that with the Canadian dollar, everyone was buying the US dollar against the Canadian dollar, and the SSI ratio hit fairly extreme levels. Well, Momentum 1 would have taken a short position, and this is, again, a cherry-picked example, of course. This worked really well in this instance, and it doesn't always work this well. But if the currency pair continues in one direction and it trends for a long time, the SSI is actually going to be a fairly good contrarian indicator, and that's exactly what we see here. Now, the important thing to know about the fact that Momentum 1 looks at the absolute level, it's waiting for sentiment extremes. When do sentiment extremes occur? After big currency moves. So this basically waits for big currency moves to then say, all right, it's already fallen 100 points, I'm going to go short now. Obviously, if it's fallen 100 points and doesn't continue lower, you're going to get chopped out. And it's an important thing to keep in mind that because it looks for absolute levels of sentiment extremes, Momentum 1 is a little bit slower, very vulnerable to getting chopped out in range-bound markets. And it's really important to try to gauge your own market expectations or what you think the currency pair is going to do before you go headlong into a position because Momentum 1 did. Momentum 2 is also exclusively uses SSI. So whereas Momentum 1 looks at the absolute ratio, Momentum 2 looks at the changes in the SSI. And this is actually a pretty important difference. A lot of the time they'll be pointing in the same direction. The earlier screen grab I showed said exactly that. Momentum 1 and Momentum 2 were short the euro at the exact same time, and that shouldn't be surprising. But oftentimes they're not. Momentum 2 is a little bit more nimble because instead of waiting for that sentiment extremes, it'll read the tea leaves, so to speak, and it'll say, all right, well, maybe everyone's net long, but in the past 24 hours, they've been selling pretty aggressively. I'm going to take the opposite position of the market. Everyone's selling, I'm going to go long. And that's exactly what Momentum 2 does. It looks at the relative level of the SSI, and if it's moved significantly, if it's the highest or lowest it's been in the past week or so, then it'll take the opposite view of the market. And already you see that this is probably going to be a little bit faster to react. That's good and bad depending on what market conditions dictate. So going back to the Canadian dollar, let's say that the Momentum 1 system went net short, or short right around, well, first here, and then it went short right around 105, let's say. And I don't know that for a fact, but I'm pretty confident that it did. So what you see here is that actually long positions actually dropped fairly substantially after that. And Momentum 2 is looking at this and saying, all right, well, I'm going to go in the other direction. Momentum 1 would have stayed short. And that's good or bad, again, because the Canadian dollar continued going lower, whereas Momentum 2 might have gotten a couple, maybe this looks like about 200 points. Momentum 1, had it stayed in the position, would have been good for a much larger amount. So again, you're kind of seeing how the different trading systems might use the speculative sentiment index, how we have found that you can actually use this. It's actionable information based on, Forex trading crowd flows. Now, there are a couple of systems on here that don't use SSI whatsoever. This chart is significantly less colorful than the last, literally and figuratively, because it doesn't have SSI information. It doesn't use this, it doesn't leverage our data to really take a more accurate view of the market. So breakout 1 is very simple. It waits for lulls in volatility and then trades the subsequent breakout. It's purely price-based. And it's had a fair degree of success, but I won't hide the fact that I don't like breakout 1 as much because it doesn't have an edge. Whenever you're trading, you're always looking for something to one-up the other person. Let's be honest here. You're trading against some of the best and brightest in the world with really deep pockets. You can't just log onto your trading system, trading station and say, I'm going to beat this guy at this bank or this hedge fund because I know the market better. Maybe you do know the market better, but I prefer to really have that edge. And I really think that the SSI is one of those edges you can have. So again, breakout 1, decent, not bad. It'll have good stretches, especially when markets are very volatile. But again, you'll see that breakout 2, again, we're having a almost cartoon-colored slide because I want to emphasize the fact that it is significantly more information. You get significantly more color with the SSI because breakout 2 is actually not all that different from breakout 1. Breakout 1 uses a couple of more indicators. Breakout 2 is literally one of the most simple systems I've found that is actually effective. And whenever I say simple, I don't mean that pejoratively. I don't mean simple-minded. I don't mean, this could be significantly better if I added a bunch of rules to it. Simple is great, in my opinion. As a programmer, when I'm making trading strategies, I always like to see that I have as few rules as possible. Why? Because if something goes wrong, I know what's going wrong. Let's say that your car's engine has 1,000 moving parts. I don't even know how many moving parts is in an engine. But let's say that there's a significantly more robust model with 250 moving parts, and something goes wrong with a really complicated one. That could be any one of 1,000 things. That's the same kind of thing that I try to tell people. I really want you to take away that simple is better, in my opinion, because when something goes wrong, you know what's wrong. In this case, breakout 2 trades very simply, 24-hour breakouts. It looks at the past 24 hours of trading. And if the currency pair breaks its high or low, it'll then take a look at the SSI to see if it'll confirm the breakout, let's say. So that's pretty substantial because we have an exceedingly simple system that I can tell you that doesn't necessarily work all that well by itself. But then we add our edge, the SSI, and all of a sudden it becomes a fairly robust strategy that has had fairly good results over the past few years. In this particular instance, this is a sterling yen chart. And this is something that shouldn't go unmentioned. The breakout strategy tends to work very well with volatile currency pairs such as the sterling yen because you can see it actually tends to move fairly substantially. And when it breaks out, a lot of the time it will continue in that direction. It's really important to know currency pair selection, and we'll talk about market conditions to decide which SSI system or other kind of system we might use in a specific environment. Finally, we get to the range systems. Again, less colorful a chart, and I won't hide the fact that this isn't one of my favorite strategies. A, because actually, on a personal level, I'm more of a momentum trader, but B, because, again, no edge, no color, nothing down here. What it does, what range 1 does, is wait for substantial deviations from medium to long-term trends, and basically tries to play mean reversion. All that means is it tries to sell when something's really expensive as it relates to the past several months of trading. It tries to buy when it's really cheap. That works sometimes, but obviously you can see that there are situations in which that would not work because currency pairs can continue significantly in one direction or another. In this particular instance, the Swiss franc Japanese yen pair is actually one of the pairs that lends itself fairly well to the strategy, because on one side you have the Swiss franc that is a very low, a currency that has a very low interest rate. This is a bit beyond the scope of this presentation, but we see that both currencies on the side of this currency pair have very low interest rates. Well, that means that it's probably not going to react as much to speculative interest in playing these interest rates, and these will tend to move somewhat in the same directions. I mean, they're completely different countries, different currencies, but over the long run, the Swiss franc Japanese yen pair will probably move less than the Australian dollar Japanese yen pair, because the Australian dollar is the highest yielding G10 currency, and the Japanese yen is the lowest yielding. So you have a lot of speculative interest in that pair, because people want to collect the rollovers. In this specific instance, the range 1, the medium to long-term range trading strategy, does relatively well in the Swiss franc Japanese yen for that reason that I just mentioned. Finally, and again, we're back to a system that uses the SSI. This is the range 2 system, which I love breakout 2 because it's very simple, and it uses a simple SSI number that, despite its simplicity, is very powerful. If you compare, a regular 24-hour breakout strategy to breakout 2, you'll see that breakout 2 will tend to outperform for significant stretches of time. It's the same idea here. So range 2 uses a short-term, this is on a daily chart, it uses a shorter-term oscillator, and basically it tries to decide that the market's overbought or oversold. Now, obviously, if you've traded with the RSI before, you don't want to trade the RSI when the currency pair continues to hit new highs and new lows, because let's say that the RSI is going to be significantly oversold if the euro-US dollar continues to hit new lows. That's a signal to buy, but if you buy there, you're going to get run over, essentially. The reason SSI comes into this equation is like we saw with the Canadian dollar currency pair. When it continued to trend, the SSI ratio became very extreme, very one-sided. Everyone is buying the US dollar against the Canadian dollar. So the SSI ratio in itself tells you that the market is trending significantly in one direction or the other. In this specific instance, this is the New Zealand dollar US dollar pair, and we see here that the market's relatively range-bound throughout this whole period, except for this let's say 600-point rally right here. Traders are pretty indecisive, especially this stretch right here through much of 2010. It's slowly drifting lower, but traders keep flipping from net long, net short, net long, net short, and the SSI ratio isn't hitting any significant extremes. This is the exact kind of environment that we would want to trade an oscillator, because the thing pulls back when it hits new highs, when it becomes significantly overbought. It pulls back when it becomes significantly oversold. So range 2 uses SSI as a trending indicator and says, okay, if the SSI ratio is too extreme, I'm not going to use this oscillator because it means that markets are moving too much, and I generally don't want to get run over by trying to buy when it's oversold, when it's going to continue setting new lows. Now, the critical thing to note is that there are 6 different trading strategies, and this is a perfect example of why this gets confusing, because right here we have actually 3 systems which use the SSI. 2 are going in one direction and 1 is going the other. What do you do in this situation? Good question. I'm more quantitative mind, but I recognize and I wholly believe that human eye is better at picking up certain patterns, certain developments in currency pairs than a programmer can program into a system. So the first thing I do to kind of get a sense of which system I think is going to outperform, especially in instances in which they're pointing in the opposite direction, take a look at a chart. Let's say that over here, the thing is in a really choppy range. I mean, I don't know that until, let's say, here, but you can see that the currency pair is essentially going next to nowhere over the past few months, and as such, I'm probably going to avoid buying when sentiment is at extremes, or taking a contrarian position at sentiment extremes, because the SSI might be right. The trading crowd is generally right during times of range-bound price action, because like I said, the instinct is to buy when it's cheap, sell when it's expensive. So I'll avoid momentum 1 and momentum 2 when markets are really range-bound, as we saw here. Again, we don't know that it's range-bound until we get, let's say, over here, and it fails to hold the high. So, obviously I'm not going to say that I knew to trade range 2 over here, but get a general sense that when you look at a chart, you try to decide what your trading bias is, or what your bias on the market conditions is going to be, and then trade accordingly. This is true for the trading signals, and this is true for any other trading strategy. It's important to know when it's going to work. And the more simple it is, and again, I come back to that point, the more simple it is, the easier you're going to know when it's going to work and when it's not going to work. So we have a couple tools on here to help you decide when each individual system should be at its best. So this trend indicator is very simple. It's not especially complicated. Like I said, this was obviously programmed. This is a very simple equation, an algorithm that tells you whether the currency pair is at the bottom or the top, near the top of its past in the past 1,000 trading bars. It's down. Momentum 1 and momentum 2 are short. That's a good sign. The trend is down, and momentum 1 and momentum 2 are trading in that direction. So maybe I'll lend more weight to that. Again, this is kind of a rough idea, so I wouldn't necessarily trade significantly solely off of this trend indicator, but it's good to keep track more or less of what's going on. More significant, and we'll see this right here on this chart right here, is the volatility expectations. Today at 4:30 I have a presentation on FX options market, and basically what I'm going to talk about is how we use FX options prices to our advantage in trading FX. It's a bit beyond the scope of this presentation to tell you exactly how we get these numbers, but in FX options there are implied volatility expectations. So the price of an option will vary depending on how volatile markets expect that currency or whatever asset class is going to be. In this case, we use these volatility expectations as a best guess estimate for how volatile the currency pair will be in a specific time frame. If this volatility index, which is based off of those FX options implied volatility expectations, is very high, then I'm probably going to ignore range 2. Why? Because I've done actually a fair amount of research that shows that range 2 tends to do pretty poorly if this volatility number is basically in its top third of the past 1,000 trading bars. Right now it's actually fairly low, but again the trend is down and momentum 1 and momentum 2 are down. So you go back to the chart and you have to make your own trading decision. Which one do I follow? Do I follow any? Do I completely ignore this? Do I think that the shorts have a chance to work? And this was taken a couple weeks ago. I guess it ended up working because the euro is pretty significantly lower now, but that's obviously not always going to be the case. On dailyfx.com, I publish a weekly article called The Weekly Strategy Outlook that I try to give my own take on what trading systems should work that week. Again, I'm not infallible. I make best guesses. Trading is a game of probability. We'll go for the highest probability. I'll talk about specifically which ones, in my opinion, have the greater probability of functioning. So when volatility expectations are very high, and this volatility percentile should match up nicely with this volatility bar right here, I'm going to favor something like a breakout strategy that does well in fast-moving markets. If this volatility percentile is very low and price isn't moving very significantly, I might trade range systems. Now, I'll admit that the case for trend systems is a little bit more complicated because it doesn't necessarily vary based on volatility expectations. To a certain degree it does, but not really. So that's one of the bigger judgment calls. But I hope that you get a better sense of why I like the SSI as much as I do, because it's created, even in its abject simplicity, systems that have a couple years under their belt that have actually proven fairly accurate. And on the bottom of this page, you'll see the past 60 trading days of hypothetical results for each of the systems. One thing I always stress is that those details are the results had you followed those systems blindly. But I don't like trading on other people's advice. I always like trading my own trading style because you're not going to borrow your little brother's jacket because it's going to be too small, or your big brother's coat because it's going to fit you, like a dress essentially. Why would I listen to this guy that said sell if my system is saying something else? If he trades a completely different style. The reason I mention that, the reason that's important, is that I prefer to look at these as guidelines. You can see the results had you follow these blindly at the bottom of the page, but at the same time, that jacket might be too big for you. It's not going to be to your specific trading style. So I would prefer that people just look at these for direction. In this case, both momentum systems are short, which isn't a rarity that they're pointing in the same direction. That gives me a pretty good sense. The trend is down, both momentum systems are short, and that gives me a pretty good sense that price could continue going lower. What does that mean? I might look for short positions, and et cetera, et cetera. This is true of the other trading systems. You can follow them, but Momentum 1 and Momentum 2 were designed in-house using the SSI about in 2005, 2006. And we developed the systems to solely trade off of SSI. So they don't use stops and limits. They only use SSI to get in and out of trades. Unfortunately, we can't update you as quickly as possible when these shifts occur, so we'll never give you a trading system that has no stops on it. And sure enough, if you go back a little ways, you'll see that all of the systems have stops. Not all the systems have limits, because we would never give you a trading signal without stops, but Momentum 1 especially tends to be a system that doesn't work well with set profit targets. The reason I'm talking about this is because I want you to look at this and then look at your chart. All right, well, this stop is at 35.80. That's nice, but my chart shows that 35.50 is a much more significant support level because that's a Fibonacci line, that's a moving average line. This algorithm isn't going to know that. You want to look at your chart and you want to look at this for direction, but then when you go to actually trade, use your own discretion and use your own trading style. So I hope you took a lot of out of this presentation and you see why I openly gush about the SSI. And I'd like to open the floor to questions on the SSI, on the trading signals, on DailyFX Plus, whatever questions you may have. Thank you. Question? That's a good question. The answer is frankly no. But what we will do is actually, if you're familiar with the strategy trader that we're basically beta testing right now, it's going to be a huge institutional priority for us to have systems on there. So what we're going to do, and I can't give you a strict timeline because there are a couple of details that have to be worked out, but the trading signal systems will be on there in the next several months. So that's definitely a big boost. I mean, some people ask me, why don't we share the SSI? Well, it's kind of our golden goose. It's kind of so significant to us that, we're just not going to share it with just anyone. We'll publish it twice a day, but the live thing, we want to keep a little bit for ourselves. Question up front?
I'm familiar with the concepts. I'm curious to know specifically. Does the momentum table, the momentum 1, 2 on the right, lower right corner, relate to the MA or SSI? I'm a little confused.
Oh.
Yeah.
Oh, sorry.
Yeah. When they're turned down, does that relate to the technical indicators of the graph or a particular set of oscillating technical indicators?
Sorry to understand your question. You're referring to the momentum or the trend?
I said momentum. I mean to say momentum.
Okay. The question is, do these arrows represent specific technical indicators or the SSI? The arrows will always show if the system is long or short. As I mentioned earlier, Momentum 1 and Momentum 2 don't use any technical indicators except to set the stop, which I can tell you what it uses, a basic dumb average trading range to give it a good estimate as to what might work. But again, these systems are purely SSI based, so the arrow will always correspond to what it's doing according to the SSI and according to its trading style. Yes?
SSI data offered on all pairs?
Not on all pairs. And I mentioned it a little earlier when I showed that open interest chart. You don't want to look at something when there's not very much data for it. So if there are only a certain number of traders trading, let's say the Swiss franc against the Japanese yen, then I probably don't want to share that SSI information because it gives a false sense of, this is a good indicator. So we don't publish those. And we publish Australian dollar and Kiwi dollar, but again, I expressed a little bit of caution using the SSI in those pairs because the open interest is so small. Yes?
How would I use the upper middle, volatility, volume, meters, for lack of a better word? How would I use that information?
So,
Maybe like capital or 3/4 element, or like when volume now is running on empty, or volatility like gas. How do I use that information? It's a nice pretty graphic, but to me it's a big so what.
great question. The question goes, how do I use these specific bars in the actual trading decision? So if you put your mouse over on these bars, it'll give you a number. That number is a percentile as how high volatility expectations are in relation to the past 1,000 hourly bars. So if this volatility bar, to give you a rough idea, range 2 tends to do pretty poorly if this number is above 66, 70, or 75. It becomes a little bit of a judgment call, but if that bar is well above at the top quartile, top decile, volatility expectations are really high, and I probably don't want to trade range 2. I probably want to look at breakout trades. There are no trades in this specific instance, but I'll look to those systems, and I might look to ignore the range systems. This volume data, it's on there, but I haven't personally, to be perfectly honest with you, I haven't found any substantive link between the volume indicator and the performance of these systems. This will vary more with time of the trading day when more traders are on and less traders are on. Yes?
What's the question mark on that?
Oh, this is just a screen cap from the actual page. So if you put a mouse over it, it'll give you more information on that box. Yes?
Litmus test for the overall picture of SSI positive 3 over purchase on the long, or conversely, shorting is a litmus test. Do you follow that school of thought? Do you vary from the 3 as a litmus test in terms of SSI as a number?
The question is whether, or there are a couple places. We used to say that 3 and -3 were the big extremes at which we would pay attention to the SSI. Actually, the SSI in the past few years has compressed a little bit, so it's no longer 3 and -3. I'd say once you get to 1.5, -1.5, then you start paying attention to the SSI. But again, it's really important to also look at the shifts in sentiment. So maybe it might even be 1.2 longs for every short position, but overnight longs, like it's flipped to net long, and longs have jumped 100%. That's pretty substantial. So it's not always about the absolute ratio, but also the shifts. But if we're talking specifically about the absolute ratio, I say extremes start at about 1.5 and 2. Yes?
The SSI is based on just 1,001.
Thousands of traders on FXEM's execution desk. So we'll share this information with our clients. saying this is what the crowd is doing, this is what the vast majority of people are doing, so you can take this information and try to formulate a better opinion on the market. Now, sure.
Does it continually update then? Is it a streaming number or is it done once a day or how?
It's done twice a day. If you go to the Forex Trading Signals page, the Daily FX Plus page, and you go to the SSI tab right here, you'll get that number those numbers twice a day. It's about 5 in the morning Eastern time and 1 p.m. Eastern time every day. Yes?
Can you explain the significance of short interest?
Short interest? Sure. The short interest basically means that the number, or depending on your definition, how many short positions are in the market. So when we're talking about, it's more popular to talk about in terms of futures, but you talk about open interest. There's long interest and short interest. That's basically saying how many traders or what value of trades are long and what are short. That's exactly what the COT reports, for instance. It tells you how many contracts are long and how many are short with open positions. Yes?
Sorry,
Sure.
nomenclature question. Is a breakout here a trend? And if it is a trend, is it sort of just similar to like a fast, steep, or sharp trend breakout?
The question is whether a breakout is similar to a trend. They'll often point in the same direction, and that shouldn't be surprising, like the breakout and trend systems. So in a sense, yes, but in another sense, breakout systems are a lot faster. Because for instance, that trades 24-hour breakouts. If the price moves a lot, sentiment might take a little while to react. So breakout 2 is a lot faster, but often they'll point in the same direction.
So the distinction is a short-term breakout. Could be one thing. The distinction could be a short-term.
That's a good point. The distinction could be a short-term move, whereas a trend is more of a medium to longer-term move. Yes? All right. I'll go to a daily chart. All right, this is a daily chart. Okay.
Are you looking for when it's flipping from red to green?
I do look at that pretty substantially. The best example of that was the euro-dollar chart that I showed earlier, where for the first time in a long time, let's see if I can get back there. For the first time in a long time, traders flipped really heavily net long from net short positions. So I definitely do look at the flips, and you can get a good sense of why it flipped by looking at these little open interest numbers. The green line is long open interest, and the red line is short open interest.
So go back to the screen where the euro was going up on the left. Now, if you came into the chart, far left of the chart, and at that time you were looking at this, and it's solidly red, is your conclusion that the crowd's wrong and should be looking for long trades?
It's been my experience that, or the question is, if I see this on the far left, that the actual SSI ratio hit -4, which means that there are 4 traders long for everyone that's short, is it my opinion that the crowd's wrong? The research and the trading results have shown that at these substantial sentiment extremes, the crowd tends to be wrong. So I'm of the personal opinion that if you do see these major extremes, it's typically a sign that the currency could continue in the opposite direction. There's a question towards the back.
Yeah, the different systems that you show that take the SSI into consideration are essentially technical systems using this bit of psychological data. Can you think of any other, or does FXCM publish any other psychological indicators?
Good question. FXCM or the SSI is our only proprietary psychological indicator, but for instance on dailyfx.com, I'll publish something on FX options sentiment. Jamie Setley will publish something on commitment of trader sentiment. So this is our only proprietary one, but you can definitely read a little bit more on sentiment across different types of markets. And actually I have a presentation today at 4:30 that I'll talk about a specific trading strategy that has worked relatively well in a couple of currency pairs using FX options volatility expectations. Oh, right over there. When you say on the website, do you mean DailyFX Plus or DailyFX.com? The question is, what's the lowest time frame or the highest frequency, as in like the short? Okay. What's the lowest time frame in which I'll write about this type of information? That's actually a good question. On dailyfix.com, which is our research site, you can get a bunch of articles talking about more medium-term trends, but because of the article format, it doesn't lend itself well to using 5-minute charts on, if that article is going to be there for the rest of the day, I'm not going to use a 5-minute chart in my report. What I will say is that we have a real-time news feed in which the analysts post much shorter-term charts frequently, and we'll talk about much shorter-term developments in our real-time news feed. I didn't cover this. I covered this in the earlier presentation, but that's also a product that I really enjoy, not only because I write for it, but it's legitimately useful because we are able to put those higher frequency charts on there. There's a question over here.
When your systems conflict, like the range and the momentum are conflicting, do you guys hedge or?
All right, the question is, when the systems are conflicting, do we hedge? On a proprietary basis, no. It just offsets in the specific trading accounts. So essentially, if there's one system long and the other two are short, we'll have one short position in the market. This question over here.
Could you go back 2 screens to the, your US cheap is long 4 positions for every short position of the cheap on that screen. But on the Euro US, since the US cheap and the Euro US are negatively correlated, how come people are positioned long in the Euro US? In essence, they're canceling each other out.
That's a good question. The question is, in this specific instance, is a good example of it. The dollar Swiss franc SSI ratio is at 4.3, and if you know currency correlations, you know that the Swiss franc is extremely highly correlated to the Euro US dollar. So why is it that against the Swiss franc, people are heavily net short, but against the euro, people are marginally net long? Can you use this information? I would suspect that in this particular instance, these two pairs are extremely well correlated most of the time, but if you look at the Euro-Swiss franc currency pair and it's moving a lot, I suspect that that's what happened here. The Euro-Swiss franc was moving a lot, and the correlation broke down. Another thing to point out is that as you get more traders, the sample of data gets a little more homogeneous. So for instance, the Euro-US dollar SSI ratio, because the Euro-US dollar is such high open interest, you'll tend to get less extreme SSI readings. So in this specific instance, it doesn't surprise me that the dollar Swiss franc ratio is so extreme because the dollar Swiss franc makes up a relatively small percentage of total open interest in the market, or for FXCM. Question?
Generally, I've seen that there is a lot of the transactions
In the night, or what do you mean? Oh, I'm sorry. Oh, the trading. Oh, of course.
So when you say that real-time news, are there more activity among your analysts in the daytime or in the nighttime?
The question is, common markets are a lot more active in the night, or specifically, especially, well, depending on the time zone, the European session is very active. The question is whether we have coverage during those times. Yes, we do. We have analysts basically 24 hours a day, 5 days a week, covering it on the real-time news, and obviously the trading signals doesn't turn off through the London session, let's say.
Which markets do you think are more active at between 9 o'clock Eastern to midnight?
Which markets do I think are the most active? Well, Eastern, the most active time of the day, the highest liquidity is the overlap between the London and New York sessions. So that's approximately 8 a.m. to approximately 11 or 12 p.m., depending on the time differences, which change through the year. But that's the most active trading session. So within your trading session, 9 to 12.
9 to 12 Eastern?
Yes. Volatility tends to slow down a little bit after 11 a.m., I would say. But definitely from 8 to 10 is the biggest moves of the day. And then before that, there's a big spike in volatility at the London Open. And for certain currency pairs like the Japanese yen and the Australian dollar, you'll see big moves at the Tokyo Open, which is around 5, 6 o'clock depending, or Eastern. Question?
I just still a little new to some of these indicators. What are the green and red lines in the graph, not the overall SSI, I'm sorry, not this graph, but the other one where we have an actual price range and typical below it. The daily chart.
Oh, I understand.
I know you said it, I just didn't follow what the red and green lines mean.
So the question is, what are these red and green lines on here? The green line tells you how many traders have an open long position. The red line tells you how many traders have an open short position. So actually, we only publish this chart on the weekly article on dailyfix.com, but you can generally see sometimes the SSI ratio will move a lot, and it'll suggest that a lot of people are buying, but in fact, a lot of people have just closed short positions. So sometimes it's useful to look at this information, and you can basically get the same information over here in the DailyFX Plus SSI updates, where you see daily changes in long interest and daily changes in short interest. Question?
Trade breakout 1 and 2. My question is on sell stuff. A lot of them make sense. You're so far out, it looks like if you look at the margin call. What's the reason for a huge gap in sell stuff?
The question is specifically about, I suspect for breakout 1 and 2, the stops, the protective stop losses can vary pretty significantly, and sometimes they're really large. I can tell you for a fact that the stop losses and take profits on breakout 2 are based on the average trading range for that specific currency pair. So if you're trading, let's say, a sterling yen, which moves a lot and it's very volatile, then the stops will be accordingly pretty wide. Yes?
What pairs are on the pie chart? It's hard to see. What pairs are you on?
It's all the pairs that we offer the SSI ratio for. So it's the euro, US dollar, sterling against the US dollar, the Japanese yen, Swiss franc, Canadian dollar, sterling yen, Australian dollar, New Zealand dollar. No euro yen. But you can get a sense for euro yen positioning just by looking at the euro, US dollar, and the dollar yen.
Now, the SSI shows the net position of the longs and shorts of all the traders through FXCM, right?
Yes.
Wouldn't it benefit the central banks to be able to somehow see this information, to see how many people are short or long? They're able to see the information?
The question is whether central banks should be able to see this information. If they could. Not really sure what they would do with this, the information, to be perfectly honest. Or they can definitely see stuff like CME positioning through the CFTC futures report. Whether they would want to see the retail market. The retail market, though growing substantially, makes a fairly small proportion of the market. So they would probably be more interested in talking to the commercials, for instance. Question in the back?
Did you say that the sterling yen was non-US cross?
Yes, that's correct. The question was if the sterling yen is the only non-US dollar cross. And if you look at this chart right here, the sterling yen open interest actually is fairly large, especially compared to other US dollar pairs So you can see why we like putting sterling yen up there and not necessarily a lot of other crosses, because again, we have a large trading sample. And I can tell you from experience that the sterling yen SSI, or the SSI tends to work fairly well on the sterling yen. That's another major reason why we publish it. Any further questions? Oh, in the back. I'm sorry? Price action? Min-var combo? Price action paint bar? I'm honestly not too familiar, to be perfectly honest with you. Sorry. Okay, well, I thank you very much for attending the seminar, and good luck trading. Thank you.